Is China really planning to wipe Pakistan off the face of the earth? Now, that's a provocative question. In recent times, Pakistan's economy has been grappling with severe pressures: high debt levels, currency devaluation, floods, and soaring prices of imported food and energy, with many pointing a finger at China's role in this economic turmoil. But what's the real story? Could it be that China is driving Pakistan deeper into debt? In this video, we will explore the facts and figures behind these claims. Pakistan's economy is in a precarious state. A nation with so much potential, yet it struggles under the weight of a myriad of economic challenges. Let's peel back the layers of this complex scenario. At the core, we find high debt levels. The nation's debt has been climbing at an alarming rate, creating a dangerous economic imbalance. As the government borrows more, the country's financial stability wavers, leaving its economy vulnerable to shocks. These high debt levels are not just a symptom of fiscal mismanagement, but also the result of an ongoing struggle to fund essential services and investments in infrastructure. The next challenge is the depreciation of Pakistan's currency. Over the years, the Pakistani rupee has lost significant value against major currencies. This depreciation has made imports more expensive, fueling inflation and squeezing the wallets of everyday Pakistanis. Adding to these woes is the regular onslaught of natural disasters. Floods in particular have wreaked havoc on the country's agricultural sector, a critical part of Pakistan's economy. The damage to crops and infrastructure leads to food shortages and spikes in food prices, exacerbating the financial strain on households and the government alike. Yet another blow to the economy comes from the high cost of imported goods. Pakistan relies heavily on imports for its energy and food needs. However, the rising global commodity prices combined with a depreciating currency have made these imports increasingly expensive. This has not only fueled inflation, but also widened the country's trade deficit. These challenges have created a vicious cycle: high debt leading to currency depreciation, which in turn increases the cost of imports, leading to further debt, and the cycle continues, dragging Pakistan's economy further into the abyss. And at the heart of these challenges, China's role cannot be ignored. As we delve deeper into this issue, we'll uncover how China, a seemingly friendly ally, might be contributing to Pakistan's economic troubles. But more on that in the next scene. China's influence on Pakistan's economy is significant. This statement is an understatement, to say the least. China has been pouring investments into Pakistan for years, and the impact of these investments is far-reaching. Let's start with the most prominent symbol of Chinese investment in Pakistan: the China-Pakistan Economic Corridor, or CPEC. This ambitious project, part of China's larger Belt and Road Initiative, involves a network of roads, railways, and energy projects stretching from China's western region to Pakistan's southern coast. The CPEC, valued at approximately $62 billion, is touted as a game-changer for Pakistan's economy. However, the glittering promise of CPEC comes with a hefty price tag. In return for its investments, China provides loans to Pakistan, contributing significantly to the country's debt burden. These loans come with conditions and strings attached, which have raised concerns among financial experts and economists. China's lending practices are often opaque, with interest rates and repayment schedules shrouded in secrecy. Critics argue that these loans trap countries like Pakistan in a cycle of debt and dependence on China. Not to mention, the terms of these loans could potentially give China significant leverage over Pakistan's economic and political decisions. Moreover, the influx of Chinese goods and workers into Pakistan as part of these projects has led to concerns about the erosion of local industries and jobs. While the CPEC promises to boost Pakistan's economy, it is essential to consider who benefits most from this arrangement. Furthermore, China's investments are heavily concentrated in energy and infrastructure sectors. This has led to questions about the sustainability of Pakistan's economic growth and the potential for economic diversification. Clearly, China's economic footprint in Pakistan is massive, but is it harmful? This question requires a nuanced understanding of the complex dynamics at play. It's not just about the money, it's about power, influence, and the long-term implications for Pakistan's sovereignty and economic independence. It's a delicate balancing act, one that Pakistan must navigate with care. Many economists refer to China's strategy as debt trap diplomacy. So what exactly is this debt trap diplomacy? Well, it's a diplomatic strategy where a creditor nation intentionally extends excessive credit to a debtor nation with the alleged intention of extracting economic or political concessions when the debtor struggles to service the debt. It's like a spider weaving a web to catch a fly. Now let's put this concept into context. Imagine Pakistan as the fly and China as the spider. Over the past decade, China has emerged as Pakistan's largest creditor, lending billions of dollars for infrastructure projects under the Belt and Road Initiative. These loans, while initially seen as a lifeline, have started to look more like a noose. Take the example of the Gwadar Port Project, a key part of the China-Pakistan economic corridor. This project, financed largely by Chinese loans, was touted as a game-changer for Pakistan's economy. But the reality has been less rosy. Repaying these loans has put a severe strain on Pakistan's already fragile economy, leading to a sharp depreciation of the country's currency and a surge in inflation. There's also the case of the Sahiwal coal power plant. Built with Chinese loans, the project was meant to help meet Pakistan's energy needs, but the high cost of repaying the loan and the expensive imported coal needed to run the plant have made electricity from Sahiwal one of the most expensive in the country. This has further burdened the common Pakistani citizen who is already grappling with economic hardships. Now let's be clear, the concept of debt trap diplomacy is controversial, with some arguing that it's more a case of poor economic management on the part of the debtor nations rather than a nefarious plot by creditor nations. But when we look at the mounting debt, the struggling economy, and the harsh repayment terms, it's hard to dismiss the idea that Pakistan may indeed be caught in a Chinese debt trap. So, is Pakistan falling into a Chinese debt trap? The evidence seems to suggest so. The future of Pakistan's economy hangs in the balance. As we delve into the potential future scenarios for this South Asian nation, we can't help but consider the escalating debt and the ongoing influence of China. Pakistan's economic plight is indeed a multifaceted puzzle with no easy solutions, yet it's crucial to explore the possibilities that lie ahead. One potential scenario is that Pakistan continues on its current trajectory. The escalating debt, coupled with economic policies that are heavily influenced by China, could lead to a precarious situation. With China's Belt and Road Initiative, Pakistan has borrowed heavily, potentially leading to a debt trap. If this continues, the country could find itself in a position where it's unable to repay its debts, leading to economic instability and potential bankruptcy. Yet there's another side to this coin. Despite the looming debt crisis, some sectors of the Pakistani economy are showing promising signs of growth. Technology, for instance, has seen an impressive upswing, with startups making strides in areas such as e-commerce and fintech. If these sectors continue to thrive and create jobs, they could help to stimulate the economy and offset some of the negative impacts of the debt. And then there's the wildcard scenario. Pakistan could potentially renegotiate its debt with China, securing more favorable terms and buying itself some much-needed breathing space. This would require diplomatic finesse and strategic planning, but is by no means out of the realm of possibility. Regardless of the path Pakistan takes, one thing is certain: the country's economic future will be shaped by its relationship with China. From the Belt and Road Initiative to the debt trap diplomacy, China's fingerprints are all over Pakistan's economic landscape. How this relationship evolves in the coming years will be pivotal to Pakistan's economic destiny. It's clear that Pakistan's economic future is intertwined with China's actions. The choices made today will echo into the future, shaping the economic landscape of Pakistan. So, is China planning to wipe Pakistan off the face of the earth? This question may sound a tad dramatic, but it's worth pondering. We've taken a deep dive into Pakistan's economic challenges and the significant role China plays in it. Pakistan's economy is grappling with high debt levels, a devalued currency, natural disasters, and escalating costs of imported food and energy. But it's not all doom and gloom. The nation has shown resilience and potential for growth despite the odds. Enter China, a key player in Pakistan's economic narrative. While China's investments and aid have been a lifeline for Pakistan, they've also been a source of economic strain. The infamous debt trap diplomacy is a real concern. China's loans come with strings attached, leading to a vicious cycle of debt and dependency, pushing Pakistan further into economic turmoil. So back to our provocative question: is China conspiring to wipe Pakistan off the face of the earth? No, that's an exaggeration. But it's undeniable that China's economic strategies are exerting immense pressure on Pakistan's economy. It's a complex relationship, one that's both beneficial and burdensome for Pakistan. The future of Pakistan's economy hangs in the balance. The true impact of China's strategies will only be revealed with time. While it's not accurate to say China plans to wipe Pakistan off the face of the earth, its economic strategies are indeed exerting immense pressure on Pakistan's economy. The future will reveal the true impact of these strategies.